this panel is about how the finance industry responds to this call for net zero. In particular, what that means for banking and investment, and also what that means for the outside world. Look, what we're seeing a lot of is announcements of various parts of the finance industry saying that they are the net zero asset owners alliance, or the net zero asset managers initiative, or the net zero banks. And it seems to me that the reason that we're framing things that way is because the COP will be about how governments commit to net zero. Because of course, if you add up all the emissions from the world, from each of the countries, they all add up to the total emissions from the world. That's a bit of an oversimplification, but you can understand how that calculation is relatively simple to do. But if you're a bank, what does it mean to be net zero? So you're really careful that you don't fly to meetings when you could be doing a Zoom meeting. Well, certainly there'll be stuff like that, but wait a minute, isn't the big issue who it is that you're lending your money to? And how do you decide that? You're an investor. How do you think about what you're doing with your bonds, with your equities, how it is that you're using your powers? What does it mean to be net zero? So we want to explore that, but I want to go a wee bit further than that as well, because what it is that we do in the finance industry is interesting, but what's most interesting is how that relates to the outside world. And I want to have a discussion, and we will have a discussion about what might this mean, for example, for the oil and gas industry. And also, we love in the finance industry to have discussions amongst ourselves, particularly people from America and from Europe who are involved in the finance industry. But actually, most of the people who live in the world live in the South. And if we're going to have a sensible conversation about what we can do to help the COP and how the COP can help us, we need to talk to people who have got experience in different, less developed countries. And so we're going to explore some of that too. And I've just got a great panel to do that. They include Masja Zandbergen from Robeco. She's responsible for sustainability integration there. This is a 180 billion euro fund based in Holland, also based in Holland. And it's no surprise, by the way, they're based in Holland, because finance is notably progressive in Holland. Is Kaitlin Crouch from ING, I guess about a 700 billion, something like that, bank, 700 billion of lending, and she's the climate lead there. And then we get to the outside world, and we've got Deirdre, who is from Oil and Gas UK. Now look, some of the people that are wanting to promote the green may flip on their website and say, oh goodness, they're the proud champions of the UK offshore oil and gas industry. But actually read down the script and they say oil and gas are a core component of the transition to a green economy. So I think some interesting things to say there. And then finally, and I'm particularly delighted to be welcoming Joanne Manda from the UN Development Programme. She's in South Africa just now. I can't remember, Pretoria is it, or Johannesburg, but in South Africa right now. She's Zimbabwean herself, but with lots of experience in Southeast Asia. And so as we open up the debate to what this means for the world, we couldn't have a better qualified person. But look, let me start with Masja. So 180 billion euro, Masja, in equities, in bonds. I guess this is money that beneficially belongs to hundreds of thousands, maybe millions of people who are saving with Robeco. You say we want net zero, but what does it actually mean?
Thank you, David. I think that's a $100,000 question, or 1 million. How do you say that? Let me explain to you and to the audience what we do. I think the most important thing is that we try to contribute to decarbonization of the whole economy. We are an asset owner, an asset manager, so we invest in companies, big companies, and we feel that responsibility. So what do? We have when we want to decarbonize our portfolios, we have more or less 5 instruments that we apply. First of all, we want to exclude the worst of the worst. So exclude thermal coal companies, shale gas, Arctic drilling. And I think over time that threshold of what we think is the worst of the worst will probably increase, but this is where we are now. Then second of all, you say we've committed to net zero, so we also lowering our carbon footprint of all our portfolios. Now, what does that mean? For all of our funds, around the COP26, we'll be coming out with our first set of targets. How many of the assets will we decarbonize, and also what are the targets that we will set? And we will set them for 5 years in line with the ratchet approach. And then we will evaluate. And we're working out the details now, but it will probably mean that we will set some concrete reduction targets, maybe 10% compared to the market now. And then, of course, over time, decarbonize about 7% year on year. That's what it's probably going to look like. And we will do this for all our funds. This is not, at least we will set the target on our Robeco level, so the 180 billion level. That's the second thing. But then, lowering our exposure to high carbon emitters is not immediately changing the real economy. Because those companies often don't need new capital. So we are only selling the shares to someone else or the bonds to someone else. So what we also do is engaging from a shareholder perspective with companies. And we're asking them to set targets to become net zero in the future. And then fourthly, we can also invest in solution companies. And unfortunately, I think Joanne will come later talking about the projects that need funding. For us, we can only invest in, let's say, in big corporates. So the question is, how do we close that gap? I think that can be one of the dilemmas. But we are looking for opportunities in energy reduction, renewable energy, lightweight materials, all those type of investment opportunities. And then the fifth thing that we do at Robeco is that all our portfolios are subject to climate scenario analysis. That's done by our risk management department, and that results are discussed with the portfolio managers. So all our portfolio managers are completely aware if they have a lot of climate risk exposure in their portfolios. So a lot of things we can do, and we take that responsibility, but maybe there are other things that we cannot do, and maybe we can talk about that later.
I think that's a really helpful starting point, Masja. I mean, particularly just that place where you started, which is to say, we are contributing to the decarbonisation of the economy. and I think as well that when you say that opens up lots and lots of things that you need to do. So it's not just, I'm not going to invest in a thermal coal company any longer. It's how the finance industry uses its influence. And actually that last thing where I think you were pretty honest in saying the finance industry has got a real challenge, which is how is it that it gets money to move to the new green things that we know need to be done when the structures of our investments are set by the existing securities that are out there for us to buy. But that's a really good start to get us going. I mean, I'd like to move on to Kaitlin, because of course, presumably Masja does own some of the shares in ING, or I'd imagine that she does. But I mean, you've been pretty a progressive at ING, so climate neutral since 2007. Wow, that was early into the game. But then you go on and say, but the biggest effect is in our financing. You know, this sort of notion, it's the scope 3 emissions, the ones that our activities make possible. How do you think about this? I mean, is it simply withdrawal from coal companies? Is it, I mean, what do you do if it's coal companies? Is it also oil companies? If it's oil, is it also gas? Is it car companies? Is it airlines? How do you think about this if you're a bank? Because I think if I'm right, about 40–50% of the money, the new money that is going into oil and gas is coming from banks rather than coming from the bond markets or from equity.
Yeah, thank you so much, David. And it's a real pleasure to be here and to be among the ranks of this distinguished panel. And I think these are excellent questions. I heard it said recently that investors are owners and banks are simply service providers. So we have less of a significant role to play in pushing for this needed transition among our clients and companies. And I really beg to differ on that, because whereas the top-down push does come from investors, I would say we play a very critical part in other aspects of the value chain, the financial value chain. We fund CAPEX, as you were saying. We are also funding the assets that are driving direct emissions. And we have a significant amount of the leverage, I would say, to support clients' transition from green assets to brown assets. And that's exactly where our strategy really focuses in on. So maybe you've heard of the Terra approach. ING made a big commitment back in 2018, one of the first banks to go out there with such a landmark commitment, where we said we are going to steer our entire lending portfolio in line with the goals of the Paris Climate Agreement. And that was a bold ambition, one that we felt confident we could get started on, but one that we also knew it was going to take the whole world moving in that direction to really be successful, of course. But doing our part, we set out and we deployed the Terra approach, which is essentially an approach that looks at the 9 key sectors that make up roughly 75% of global carbon emissions, direct emissions, and we finance these sectors. And so looking at our impact in those sectors, the entire focus of this strategy is to engage with clients to support them in their transition across from green to brown technologies. And of course, in order for the world to be successful, we see there are 5 key hurdles that need to be overcome globally. And obviously that's the energy transition. That's vast efficiency gains across multiple sectors, including the built environment, of course. We need to see technology innovation and scaling. We need to see reduced overall consumption. So there's also a behavioral mechanism. And we need to see restoration and preservation of carbon sinks. And so ING is looking at our role that we play across these various decarbonization hurdles or pillars, if you will, and how can we support clients that are active across these hurdles to make the transition. So yes, it is nice that we've been carbon neutral since 2007, but that's our operational emissions footprint. And so absolutely looking to the scope 3 impacts. What are our clients doing? That is the core of our strategy. We've also been one of the few to report transparently on a sector level how we are progressing each year in steering our portfolios in these sectors in line with the decarbonization pathway that's been set out. So we've had quite some positive and critical feedback. We have committed to well below 2 degrees. Obviously, the question of the hour is, what about net zero? What about 1.5? The world is heading towards 1.5. That's what we need to push for. And so as a bank, we're also reevaluating how can we be a part of that? What are the challenges we see? What does this mean for our clients? And how can we really action this? We have an annual report that goes out every year. And so we want to have a concrete plan before we jump onto the net zero movement. But we're very excited to see this happening in the market and look forward to this discussion.
No, I think ING's got a great history on that, Kaitlin. But let me just push you a bit. But before I do, just one thing for anybody who's listening, we have this scope 1, scope 2, scope 3. Just to explain, so scope 1 is the carbon dioxide or the greenhouse gases that are implicit in your operations. Scope 2 are the ones that you bought in. So your suppliers will have to have done. And then scope 3 is the emissions that are implicit in the people you're serving. So there's a lot of double counting in scope 3. So if you're a bank thinking about your scope 3 and what bit you're responsible for can be quite a big issue. But this issue of banks and bonds, I think is hugely important, because a lot of responsible investment has started for very good reasons. It started with equities, because equities have got lots of power because they appoint boards of directors and so on and so forth. But actually the big money that is flowing, the new money that is flowing to the things that we might not want it to flow, it comes through bonds and banks. And therefore, if the bonds and banks are not reforming, the influence of finance is that much less. And it feels to me like what you're saying is, look, we've looked at all the sectors that we need to start withdrawing our funds from. Kaitlin, did you also do something that was sort of addressing the gap that Masja was talking about, which is all the new sectors that money needs to go towards?
Absolutely. And maybe just to clarify, within these sectors that we focused on, that we've identified as the hotspots, the sectors that are key to a successful transition towards the global climate goals, our strategy is not necessarily to divest. There are some sunset sectors. We have a very strict coal policy. We intend to be completely out of coal by 2025, well ahead of most other targets. We also have a reduction target on upstream oil and gas. We will possibly increase that ambition this year to see a more rapid decline. But our core strategy, again, coming back to what Masja was saying, we want to see real economy decarbonization. And in order to do that, our strategy cannot focus simply on divestment, because the whole carbon leakage discussion comes to play. So we have decided to engage with clients within these sectors to ensure that they have the support that they need. So we have identified what are the assets that they are owning and operating today. How do those assets match up to what is needed, the new, as you were saying, David, the build out that is required according to climate scenarios? How are they doing in terms of shifting their 5-year forward-looking CAPEX plans towards those assets? And that's the type of analytics that we use to steer towards our goals. It's not about what they did in the last 5 years. That is important and that matters, but we're looking at the forward 5 years of their CAPEX plans. Where's the new money going? Is it shifting towards green investments on time? So green physical assets that are required for this transition.
So Kaitlin, that sounds fine, but again, can I push just a wee bit on this? You're not drawing black and white rules, and I understand why you don't want to do that. But how does an outsider know that what you're saying doesn't have an element of greenwash about it? How much do we simply need to trust that ING is committed to playing its part in the transition?
Well, I think all of that hinges on transparency, and that is the second critical piece of this puzzle. Is we came out with our big ambition in 2018. We felt very proud, and we felt that it inspired a lot of our colleagues to take action. But we felt that it was also our responsibility to, within 12 months, follow up with a report on how we're progressing against that ambition. And that's exactly what we did. Again, one of the first reports of its kind, diving into sector level details, the analytics for every sector on how we had been performing up until that time. And we did it again. So 1 year later, so annual progress against these targets, not a target on 2050 and we wait and see how that progresses over time. No. Every year we display our progression against the decarbonization pathways for each of the sectors in scope. Also, not just waiting for even 5 years. You could say that we have an annual target, not a 5-year, not a 2030 target, but an annual target. And so I think that is the critical piece. You don't have to just trust us. You can read our analytics, you can read our reports, and we welcome the extra push and the pressure because it helps us to stay sharp.
That's great, Kaitlin. Thank you. I mean, I want to talk to Deirdre now, and Deirdre from UK Oil and Gas, and I think you're based in my hometown, Deirdre, which is Aberdeen, which was where I was born. And as you might imagine, I have many friends who made their career in the oil and gas industry because they were from Aberdeen. And, they would note that our prosperity has been fueled by the oil and gas industry over the last century. But I also have a lot of people who say, look, the oil and gas industry's got to come to an end, and quite quickly. You'd say oil and gas is core to the transition. Mm-hmm. How would what you're doing meet and match and dovetail with what Masja and Kaitlin are doing. I mean, does it?
Yeah. David, hi, thank you, and thanks for inviting me to be part of this panel, and great discussion so far. So in answer to your question, I could give you the very short answer of yes, it does, but maybe I should explain that a bit more.
That would be great, yeah.
I could just say yes, it does.
Because I think that might surprise people. I mean, it surprises me, I guess, because I'd have a sense, Deirdre, you know, one of your members is Exxon, where I think in the last session it was mentioned, you know, 10 days ago, the shareholders, amazingly, because this doesn't happen in the ownership world, actually removed members of their board because of their failure to address climate change. So, but we can't do this as enemies, can we? We need to have a consensus that we will get to net zero, and we're going to be open book and honest about all of this. And that's why I'm intrigued by, you know, oil and gas core to the transition.
Sure, and it is because, you know, yes, you would expect me to say it, and I said it, but I do believe, and we can kind of point to the data, that our sector has two roles to play. One is in continuing to provide the energy that we need across the globe, but also being key to unlocking low carbon sectors like carbon capture and storage and hydrogen, as well as offshore wind and other renewables, and also, you know, contributing to the decarbonising of our sector and the economy. And that's because, of course, we know that globally, oil and gas will still form an important part of our energy mix right out to 2050 and beyond. And here in the UK, and obviously my focus, David, as you know, is on the UK, where, you know, our companies, operators and the supply chain are already really active in the lower carbon sectors. And they've got a key role to play in achieving net zero, both, as I said, through traditional oil and gas production, but also through investment in other energies, you know, like renewables, solar, hydrogen. And that's why, you know, we need finance to keep flowing into the oil and gas sector so that it can be the backbone of these other energies as they develop, and also so that it can continue to, you know, decarbonize its footprint and reduce the footprint that it's making. So I think that you know, that's absolutely key, because as you said, you know, we have to remember that the sector does a lot of good things. You know, it security of energy supply, it produces jobs, it produces you know, taxes, it contributes to GDP. So, you know, as long as we do that, we have to make sure that we take those benefits that we have today and transition them into you know, the energy transition of the future that we're all working towards. And as a sector, and just building on what Kaitlin was saying, you know, having targets is key, having plans. And as a sector, we are in the UK committed to halving our emissions by 2030 and reducing them by 90% by 2040, and net zero emissions by 2050.
But that is that scope 1 and 2 emissions, Deirdre, rather than, because you're still going to be producing oil and gas.
So yes, so in terms of what our sector is doing, it is very much around scope 1 and 2, and it's around what the sector does in relation to its own activities. But what we are also doing, and we signed a deal with the UK government recently called the North Sea Transition Deal, and part of that emphasis is on, you know, how do we reduce our own carbon footprint, but also how do we contribute to the UK's stretching targets of net zero by 2050. And we do that by contributing to the development of hydrogen economy, carbon capture and storage economy, and working with other sectors, energy intensive sectors, to help reduce their footprint as well. So I think our sector, with its core skills, its companies, its expertise, has a role to play in both those areas. Yeah. And I think the emphasis, you know, listening to the previous discussion, should be on supporting the green companies and also supporting what, you know, the greening companies as well. So finance needs to help, yes, set up the companies that are very focused on green, but we also absolutely have to support the greening companies because they're key to our future as they are today.
Yeah. Yeah, I mean, I think already in this discussion, a big question about how the money gets to the greening companies, and I'd like to challenge Joanne with some of that as well. But Deirdre, I mean, this is fiendishly difficult for the oil and gas industry, isn't it? I mean, 3 weeks ago, the IEA came out with a report that I know the investors, I was one of them, have been lobbying for a long time, which is, you know, what does the scenario look like if we're well below 2 degrees? And I mean, it sort of says we don't need to find any more oil and gas, stop any further exploration. I mean, particularly in difficult places like the North Sea. I mean, that's a real challenge for the industry, isn't it?
So, yeah, I mean, it is a challenge. These headwinds that are facing the sector are a challenge. Of course they are. But that's why I think it's really important that the sector shows how committed it is to not only reducing its own carbon footprint, but to supporting the development of the new energies. And like I said, you know, the expertise that we have in our sector today are very transferable into these emerging sectors. And we've got, you know, our companies are all over these new energy sectors, whether it is offshore wind, whether it is hydrogen, whether it's carbon capture and storage. So there is a key role for us to play in both those spaces. And back to the IEA report, you know, it talks about no global exploration. So, but it also talked about let's get on with renewables, let's get on with carbon capture and storage, let's get on with hydrogen, and let's develop them at pace, and agreed with that. They also said, though, that we should focus on lower emissions hydrocarbons. So back to my point about the sector having a role to play, reducing its own impact. And we are doing that in the UK. Like I said, you know, we've set these targets in terms of reducing our emissions, stretching targets, tough targets. And so we see a role for ourselves in both those areas.
Right. No, I think it's interesting. I think it's also interesting the point you make, Deirdre. I mean, the really successful oil and gas companies are the ones that can demonstrate that they can run a wind farm, and that they can do that profitably. And you know, if you'd back those ones in your portfolio, you would have done very, very well over the past 2-3 years. But thank you so much for your contribution. We have so far, however, had just northern contributions, indeed, from across the North Sea, Deirdre and me in Aberdeen, and Kaitlin and Masja over in Holland. But most of the world don't live in that same developed world. And one of the things, Joanne, that when I shared the finance initiative in the run-up to Paris, I thought we were going to have lots of conversations about clever financial instruments and the nature of global warming and the rest of it. And actually what I heard from most of the delegates in the run-up to the Paris conference was, look, the North used up the greenhouse gas budget of the world and is wealthy. The rest of the world didn't have that advantage, and it's poor. Explain to us how it is that you're going to respond to that challenge, and can we see all the money that is going to be coming to us for sustainable growth? I don't know whether that's still the same feeling, Joanne, and if it is, what's the role of the finance industry in helping in helping with that issue? Because it is not an unreasonable argument that the reason that the North is wealthy is because it used up the greenhouse gas budget of the atmosphere.
Thank you so much, David. Can you hear me well?
I can well.
Excellent, excellent. It's a real pleasure and a privilege to be here this afternoon and or morning for you, and to be part of this incredibly interesting panel. You asked a really good question, David, and I think, you know, while the questions and the position of the Global South is, you know, reasonable, I think a lot has changed, and the conversation has moved on. We're all aware that we're all part of one earth, you know, and we all must make some kind of contribution. And I think you'll find that there is effort in the Global South now to also make these transitions. And the question really has shifted not so much to, well, you know, you use the oil and why can't we catch up using ours, to, no, let's look at the technology transfers that are possible. Let's look at where we can leapfrog and have economies that will also be sustainable. I don't think anybody wants to be locked into stranded assets and things like that. So I think the conversation is shifting, but I like the point that Deirdre made a bit earlier, which was, you know, the oil and gas industry is still going to be a part of the transition, and that, you know, many countries are considering, you know, issues of energy security. And so you have to start where you are. And I think this is where the UN and UNDP gives a really good perspective in terms of coming in and working with governments where they are, and then moving them in the direction of a greener economy. And you know, we have national systems that are slow. Right. I think we've all been watching the conversations in the, you know, UNFCCC and the negotiations as they have progressed over the years. It takes time. It takes time to agree on the direction. It takes time to agree on targets. And it's been encouraging, though, in the last couple of COPs, seeing the push for enhanced action, climate action, and also seeing the push for enhanced targets and enhanced ambition in the nationally determined contributions. And so this is where you're starting to see countries emerging and signing up for the net zero and carbon neutrality. And so, you know, as governments are stepping up to do this, then of course, we're expecting the corporate sector as well to move. And I think the whole thing boils down to having strong partnerships and understanding that we won't be able to achieve this globally if this is done just from the public sector side, but it needs to be a partnership with both public and private sector players. And maybe just to reflect very quickly on some of the points that were made by the other speakers, because I think if you're trying to think about transforming economies and moving from a brown to a green economy, there are a range of sort of technological solutions and also policy solutions that you need to think about. And I think within UNDP, we've been developing a very important policy tool around SDG impact and developing frameworks for both corporate decision-making, but also tracking and monitoring sustainability principles and impact performance. So I really feel like, you know, the tide is shifting, and there is, you know, global agreement that, you know, if we partner up, we can actually achieve something within the timeframe 2050 that we are aiming for.
So you're sounding quite optimistic there, Joanne, and I will come back to you about sort of mechanisms for how we get more money to flow. But I mean, you're Zimbabwean, and I was the most fabulous country and the most fabulous people. But I was reading just recently new money going for a coal mine extension of the coal mines in Wangi, which of course has been a coal mining area for over 100 years in Zimbabwe. That just feels wrong, doesn't it?
If we're going to start talking about things that feel wrong, it could get quite a complicated and long conversation in Zimbabwe. But, you know, I remain optimistic, David. I think you have to be optimistic working in the UN because the ambitions that we have are, you know, really high, and they're necessary. And you've got to keep a high vision and an ambition of that level. And then you're trying to move a diverse group of global players in one direction. It's often like herding cats, and it's really hard, but it's, you know, if the vision is clear and it is something worth attaining, then it does give me a lot of optimism in that, you know, I believe people will eventually graduate and move in the positive direction. I mean, the Wangi National Plant, I mean, for me, guess it underlines just the messiness of the work that we have in front of us. Countries are coming at this from a range of different perspectives, with a range of different needs, and with different, economic starting points. I was visiting my mother recently, and I would say maybe sort of 60% of my time we had power cuts. So something urgent is required, right? So, and without sort of the infrastructure investment in new technologies, I can understand why the government might be moving in the direction of, revamping the old power station. But again, as Deirdre said, there are technologies and expertise out there on cleaner coal, if not the old, reducing the emissions at least, trying to do it in a way that, has a minimal or minimalized carbon footprint. And for countries where sort of new technologies, new investments are yet to happen. And I think that's something to be pragmatic about and to consider as we're looking at in the energy sector. The energy mix is going to be quite important. It is going to be really hard to carbon heavy infrastructure to make that shift very quickly, especially the COVID crisis recently has had a massive impact on debt and so the national liquidity. So, like I said, it's messy, it's complicated. It does require, partnerships and lots of thinking.
So if you had, I'm always aware that, London, New York and the financial centers, they're awash with money.
Yeah.
And yet we need this investment, and we need it right over the world. We need to stop some investment as well in dirty technologies. But we need this new green. Is there any? What would you see as being the best mechanism for the finance industry to? Is there an easy mechanism, Joanne? Are we still struggling with this a bit? I mean, there's the multilateral development banks, but and they do know a lot about this sort of investment, but. Certainly, as an investor, I wouldn't have known how it was that you invested in Zimbabwe. It would need to have been the company that I invested in that then knew how to invest in Zimbabwe. So is there something we need to be doing to sort of push this agenda?
Yeah, Masja earlier in her statements really hit the nail on the head. She spoke about how Robeco is a large investment asset manager and the challenge they have in closing the gap between investing in large corporations versus what you mostly have in LDCs, which are SMEs. It's again, another messy terrain. Without market intelligence, it becomes extremely difficult for investors to put their money. And again, I don't have answers here. I do think that back to my point about partnerships and starting to really engage, the whole financial sector has to rethink the way we've been doing business. And this is, I think, was mentioned in the last session that, we've got to leapfrog somehow our business models, our, just the way in which we do our business, because we have a landscape that does not lend itself to the old school, tried and tested, large scale corporate investment model. We have dynamic, small, medium enterprises at Series A level that are going to be fundamental to the shift, and that we now need to start looking at how to service. Yeah. Kaitlin spoke about how within their loan portfolio, they're now starting to think about, real economy decarbonization and lending products that are suited for this kind of, dynamic market. And for UNDP, for example, we've got two products that we're starting to, push. And one of them is the SDG Investor Map, where we are now starting to do the market intelligence of mapping the opportunities for investments that align with the SDGs. And so you have sort of an impact investment perspective, but providing some market intelligence for investors to be able to really understand the dynamics of the local markets, really understand where the opportunities are, what sort of financing instruments would be appropriate, how to go about it, what sort of consortia to start, pulling together in order to be able to actually achieve this transition. And like I said at the beginning, I think it's complicated. We've already had some experience with green loans, for example, within the banking sector. And maybe because of, now with thinking through the implications of the COVID crisis, which has really raised the S of the ESG investing, the social side as well, and going beyond green, there may now need to be new products like SDG linked loans, for example, that tie your a loan to the achievement of a particular SDG. This is all new. This is all emerging, and I think but I'm confident that there is enough expertise within the panelists here and with the stakeholders around that we could find a solution.
That's really interesting, Joanne. Look, first of all, can I say thank you to the people that have been asking questions. I hope that some of you will see that I've tried to incorporate them in the questions that I'm asking the panelists. That one about the SMEs and the gaps in the financial system, which I think are very clear. The north-south gap, and so on. But one question we had right early on, which is a question for everybody, but maybe particularly for Kaitlin and for Masja. I mean, what are the responsibilities of the finance system? Because I would guess none of us would say the finance system, even with the best will in the world, can solve the climate issue on its own. But what are the responsibilities? I mean, when Joanne says, look, there's all these SMEs and they're doing this and you've got all this, expertise on Threadneedle Street in London and none of you are out in Zimbabwe where it's actually needed. Is that a fair criticism? Where do the responsibilities start and where do they finish?
Yeah, David, if I may, I think, and this is a personal belief as well, I think the financial industry has a big role to play, but of course it ends somewhere. I completely agree. So it ends probably with the companies that we invest in and the influence that we can exert on those companies, sometimes even governments. But very difficult, I think, to be more strict on carbon emissions when there's still, let's say, no taxation on kerosene, or when governments are still really supporting the more dirty industries. So the governments also have an important role to play, but we have to face it, we're in a transition, and normally in a transition, companies, the private sector is probably moving faster than governments. And when we look at, Joanne also mentioned the contributions, the plans of countries, we are not there yet at all in trying to keep below 2 or even 1.5 degrees. So I think from a governmental perspective, there's still also a lot that needs to be done.
So governments need to help with this and be realistic about what the finance industry does, because it's the company that makes the investment, which the finance industry owns on behalf of those millions of citizens who are choosing Robeco. And maybe it's that power to influence them that is where the leverage comes from, rather than sending Goldman Sachs bankers out to Wangi.
Yeah, I don't know. And we also try to come up with innovative solutions, right? So I think green bonds is a nice way of having more direct investments into projects. Maybe we can see some more green bonds. I'm not sure about the green bond market in Africa, but maybe that could be a solution. What we also do in our Sustainable Development Goals framework is that we give extra credits to banks that lend to SME and then in emerging markets. So we try to find those opportunities where there is more a focus on new business models, low cost value add solutions in emerging markets, lending to SMEs. That's what we try to do. And then even going a step further, maybe if we want to invest directly in projects, we can add a certain layer to our, let's say, listed equity, and maybe try to make it carbon neutral. So offsetting the carbon, the scope 3 carbon by investing in direct projects. And those are things that we can do, but that's where it really stops. And I think, that makes it difficult.
And also I think that it's useful to know what can be done and also how it all works. I remember one of the things we did in the run up to the Paris COP was a series of seminars about green bonds that had been used actually in Africa. And how the savings of somebody from a pension fund in the United States actually financed a massive solar plant. Because of course that is happening, but most of the delegates from Africa, they hadn't seen that there was a role that the finance industry could play. And there's a sort of supply push that's needed in all of this, I guess, as well, Masja. But I'd be interested, Kaitlin, as well, because ING does lots of green bondy stuff, don't you?
Yeah, indeed. So maybe then just to comment on the question of what is the role of the financial sector in all of this. I think it's quite a complex role. And there was also a quote recently by Jason Bordoff, who was commenting on some of the events emerging, in particular, perhaps those around the oil majors. And he made the point that if we want to force oil majors to stop investing in new production, the only way this will lead to reduced emissions is if demand also is reducing over time. And that's just to say that as long as the demand is there, supply will be met in sort of these dirtier sectors. So there is a systemic concerted effort across demand and supply sectors that must really be pushed forward. And I think the role of the financial sector is to support the transition that will curb the demand for fossil fuel products. And so as we step into that role as the financial sector, I think one aspect of that is that we need to do it in concert with one another. If there's just one or two or three players pushing in one direction, I think the signal to the market is too weak for it to actually land. So I think that there needs to be a complete transition in the financial sector for our role that we step into to be effective, for the voice towards the real economy to be loud and clear that this is the direction that we need to go in. And obviously the government has a role to play in that as well. I won't say more on that. But I think, stepping into that role, it really does mean that we have a systemic approach, that it is the supply and the demand, that we are lending to more green projects and assets. And I think that, distributing those on the bond market obviously also has a role to play, as we can feed that demand, the appetite that is growing all over the world, actually, as we see in the green bond market in particular. Yeah,
I'm always struck when I think about how the finance system works, that the way we learn it, which is there are all these little static markets where somebody offers a product and somebody else buys it, but actually it feels more like an ecosystem, doesn't it? Where if you change one thing here, it makes possible other things there. But to be able to get an ecosystem to work well, you need all the people that are participating in it to be around the table discussing what it is possible and what isn't possible. You also need, and we've had some questions about this as well, and you talked about this particularly, Kaitlin, the whole question of transparency. I mean, do we need something new and better? There are lots of initiatives out there to do this, but do we need something new and better in the finance system that is telling us whether or not we're on course, the institution is on course for net zero?
Shall I can maybe start off with this. I think that do we need something new and better? Well, I don't think we necessarily need something new. There is so much out there already, and I think probably that is part of the problem. There are many metrics, there are many approaches, there are many means by which a company report, even if you look just at scope 1 and 2 emissions, well, let's say scope 3 emissions in particular, because I think this is the difficult one. There's a big push for more transparency around disclosing emissions for companies. And I think this is absolutely needed. The more disclosure, the more data, and the more decisions can be made as a result of that information coming online. Now, the problem with emissions data, and I think we're all very aware of, is that there are multiple methods for measuring or estimating, for example, scope 3 emissions. Same goes for financials, same goes for any sector that is out there. And the part the problem, let's say, that poses is that whereas transparency is focused on disclosure, I think there has to be coupled with that push for transparency, a focus on standards on what is reported, what scopes are reported, what data is allowed as an input. Because if you have different data sources, you're going to have different results, and it's going to be completely incomparable. One example that I like to use is even CDP themselves. They model scope 3 emissions, and they release reports on a regular basis, and they themselves pull the spotlight onto this issue that scope 3 emissions, you can have two very similar companies side by side. One of them seems to have a very large scope 3 emissions, and the other one seems to have a very small scope 3 emissions, but everything equal besides their methodology for estimating them, they're the same company. And as a financial, if you're only looking at that, then you're going to be led to make perhaps the wrong decision.
Yeah.
And so I think metrics and standardization next to transparency is really critical.
Yeah, I think, and I'm also struck by that sometimes we haven't even done the sort of the proper investigation of the basic systems that we have, Kaitlin. I mean, it's something I've been doing a bit of work on recently. For example, our accounting systems are comfortable that you value a coal-fired power station as though it's got a 50-year life, or an oil well as though it's producing oil in 2050 at $80 a barrel. And of course, that's just sending signals through the commercial system that would, I guess, not be to the advantage, or certainly would not be doing what Robeco as a shareholder would be wanting companies to do, I would guess, Masja.
No, but that's why we do our own valuation. And we take into account ESG, and we look at, for all companies, and depending on what is relevant, and we try to value that. So is there a company that is making the transition? Do they have the means to finance it? And what value do we attach to that? But the same goes for human capital, or for corporate governance, or for any other material issue. We try to give that evaluation in our modeling. So certainly with those long-term,
in a sense, you're undressing the company to see what it is that lies beneath, because the measures aren't clear right now that they're trading sustainably, but they would then get value from you because you'd invest in the ones that are sustainable for the obvious reasons.
They would be much more attractive from a valuation perspective, because we do value the positive attributes of their ESG approach. Yeah, and also the negative, right? On the credit side, ESG analysis is often used on a negative side. So bad corporate governance, bad environmental behavior will lead to less conviction on the issuer and to a lower fundamental rating.
And I've had a couple of questions, Deirdre, to you, but just building from that one, might it be imaginable that you had an oil and gas company that said, look, I may not be the best person to be investing in the new technologies, but I am just going to run down my operations, pay out a dividend, clean out the oil well, and new jobs for everybody and so on and so forth. And if I start in 2021, by 2040, that is something that is perfectly doable for me to be able to do. I mean, would that be a good response from at least some companies in the oil and gas industry, just to say, look, let me run myself down, and I'll tell Masja that's what I'm doing, and she can stay invested, but it will be within the limits of net zero 2050.
Yeah, I think that's the point. We're all headed on this journey, and there are different companies with different roles within that journey. Yeah. So some of them, are absolutely making a fundamental shift or pivot, and others are very focused on actually our core is oil and gas, but we recognise we have to do it with a lower footprint. Hence the commitment to reduce our emissions in support of that. So I think there is a space for all, as long as we recognise the journey that we're all on. And then to enable that goes back to, I can't remember, I think Kaitlin, in terms of the transparency over what we're doing and how we're doing it. And that's when you need, things like the climate related disclosures, which companies obviously need to buy into and utilise, and the development of the green taxonomy as well, in support of that. So I think that combination can help move this agenda along, but support different companies depending on the stage that they're at.
Yes, I mean, I think the question though is it's quite a good one, isn't it? Because companies aren't immortal, yeah. But usually when they go, it's against their better will. Yeah, actually, we might be in a case here where the truly diplomatic company, serving its shareholders as well as serving its a society, would say, look, we can do this transition. We're simply going to run down, and XYZ coal company is not going to be in existence in 10 years time any longer. But everybody's, and we've closed. I mean, that wouldn't be a daft thing for people to be thinking about, would it?
Well, I think most people, like you say, kind of naturally push back against that. I think it's the evolution and the taking of the learnings that you have in the role in the company you have, and seeing how that can adapt and move forward. And again, I think, you can look at the oil and gas industry and you can see how that is happening in real time. So yeah. I don't think, I think companies could choose to do that. Of course they could. Yeah. Then they'll have all sorts of other issues as well. How do you attract your staff, and how do you sustain all that good stuff? But if you're actually in a transition role and in an evolving context, then I think there's lots of opportunity actually, and one that can be quite compelling in a financial context.
Right. Another question we've had, which is about offsetting. So you create a lot of greenhouse gas, but not to worry because you planted a lot of trees. What role does that play? Either as for a financial institution, for an oil and gas company, and how does it feel if you're in South Africa, if the oil company says, or the coal company says, not to worry because we've just planted a great big forest and that offsets the CO2. How much should we depend on offsetting? It's quite controversial. I don't know. Let me start with you, Masja.
Well, I think someone just mentioned the latest IAE report, and I think there it very clearly shows that there is some carbon offsetting needed to reach net zero. It's called net zero, right? We cannot completely do away with all of the CO2 emissions, but I like the rule of three, saying first you need to reduce, then you can substitute, and only if it's really, really necessary, you can still use carbon, but then do it in the, in the most efficient way, and part of that can be offsetting. But I think we should try to focus on the first two things before we, but of course it can be done simultaneously, because there's still a lot of research that needs to be done, and it needs to become probably more cheaper to do it. Deirdre knows more about that than I do, but I like to, I like that rule of three, where you say let's focus on reducing, substituting, and only then, if really needed, we capture.
Does that feel right, Deirdre? Or if you're oil and gas, would you want to be a little bit more pushy on this?
I think avoid, reduce, offset is absolutely shows where you need to put your emphasis and put your prioritization, but recognizing that once you've gone through the first two, you might be left with the offset. But again, as long as you're delivering with a view to net zero by 2050 and delivering on the Paris Agreement, then that's an acceptable route to take, I would suggest, just as Masja is saying.
Look, that's fantastic. Look, I've been given an extra 5 minutes, and I have my final one question that I want to ask you, which is a question from the audience, and I'd like to do it in the order that we started, so leaving you to last, Joanne. But it's this: what would a good COP26 look like? I mean, if you ruled the COP, and you could decide what it was that those 195 delegates from all over the world, all with different political pressures, who, as we all know, have already made up their mind what it is that they will be able to decide at the COP, because they've needed to make sure that their cabinets and everybody else has agreed to what it is. But imagine that now you do rule the COP and you can decide what it is that comes out of COP26. What would you have coming out of it? What would be the key things, Masja?
I think that's a very difficult question for me to answer, but if we look at the pledges and if we look at the current policies and the pledges and targets that are in place for countries currently, we're not going to reach our goals. So we really need that. There has to be a step up, and it would be great if all those pledges would add up to below 0 or 1.5, even 1.5 degrees, if that's possible. Because the longer we wait, everyone knows that, the faster we have to decarbonize. So if we were to add up all the pledges, then hopefully we'll be better than we are now, than where we are now.
So whatever it takes, the pledges need to get themselves to 1.5 degrees or well below 2. Kaitlin?
Well, I think, again, coming back to the IEA net zero scenario or report that was published, I think this really sharpened our minds. It was a report to policymakers in the run-up to Glasgow to say, this, hello, this is what needs to happen. And it is extremely difficult to do, especially without very strong cross-border collaboration. There must be a focus on how can governments, how can the parties support each other's goals, because if there's only accountability for how one country is reducing and increasing their ambition and being held to account, I think it's too easy. Just like for a bank, again, we talked about carbon leakage. Carbon leakage is a problem cross-border as well. So there has to be a strong mechanism to hold accountability cross-border, across the board, let's say, because I think there was also this focus on, for example, critical minerals, rare earth minerals. That is critical as well for achieving the technological transition that needs to happen. 60% of production is in China. So we really need to see that type of market cooperation that will unlock the technology needed and obviously the cooperation needed for us to be successful.
Cooperation, enforceability, recognizing all the other triggers that need to fall into place for sustainability.
Absolutely.
Deirdre, what would you add to the COP agenda?
So yeah, so just to reinforce, we've got to get into action. I think we should be looking around as all governments, looking at the good examples and owning them and saying, right, let's apply them together. This is about doing this together and not leaving people behind. And I think, we've got to just get into action. The talking needs to stop and the action needs to start.
Best practice everywhere. And Joanne, what would you have? You're on mute, Joanne.
Well, I think Deirdre took my point about leaving no one behind. I think, one of the things that we raised during this discussion, even when we're talking about finding the right entry points for finance, closing that gap between large scale, small scale investments, looking at how banks can drill down, not just the large scale banks, but also down to the sort of provincial banks, local banks that thinking about these things and developing new products at that scale. So for me, I think a big issue in the COP is understanding that we're all in this together and we all have common action to contribute to. I would also probably support the one about raising our ambitions. I know that UNDP as an organization, we've been supporting our governments to try and raise ambition. A lot of the countries that we're supporting will be submitting, updates to the NDCs, and I think it'd be great if we could really have some strong ambition showing up in those documents, and then of course finally the accountability side of things. How do we track all of this? How do we measure all of it? How do we make sure that we're all on track? So
new finance flows, ambition, and measurement. I hope somebody's taking notes here and telling Dharma where he needs to end up by the end of November. But I'm afraid, look, we've come to the end of our time. Let me just do 90 seconds as a short conclusion on this. First of all, to thank you all very, very much. I was very struck by a story about the Kyoto COP. The Kyoto COP finished early because everybody had reached agreement and thought climate change was going to be easy to solve, and they had it all in the bag. And the hotel had said that there was a wedding that needed the room. And so they all left half an hour early. John Prescott had told me this story. He was the British negotiator. This has not been easy at all, what it is that we are trying to do in climate. And it is not easily reaching political agreement to do that. But it does seem to me that what we've demonstrated in this discussion, first of all, that what finance needs to do is absolutely profound in terms of getting us to the solution that we need to get to. 2, that finance can't do it on its own. 3, that saying being net zero in finance is not a well-defined claim. It requires the professionalism of the Kaitlins and the Masjas. It requires new sources of funds to address the sort of thing that Joanne was talking about. And boy, it requires a dialogue with the members of Deirdre's organization about how it is that we put all these various different bits of the jigsaw puzzle together. But if we haven't solved all the problems for the COP in this past hour, and I certainly don't think that we have, I hope we've raised some, that we've made people think and think about the creative things that they can do from their institutions or their governments that will get us to a sustainable planet. Because one thing is absolutely clear, we won't have a finance system if we don't have a sustainable planet. We need to address this, this issue. And as Masja said, the sooner we do, the lower cost it will be, and the better for everyone. So look, thank you all for attending. Thank you for your good questions.